Welcome into the channel, everyone. Today we're talking the one big beautiful bill. That is Congress's plan to deal with the expiring tax cuts, as well as several other Trump administration policy priorities. Right now we're dealing with two big beautiful drafts. One passed by the House of Representatives, one passed by the Senate. Nothing is law yet. Republicans still have some heavy lifting to do to make that happen. Let's break it down, what we know so far and what's at stake. And as always, like, subscribe, leave a comment if you like this content. All right, let's start with how we got here, right? The Tax Cuts and Jobs Act of 2017 took effect for tax year 2018. This was one of the signature accomplishments of the Trump administration, certainly one of the signature legislative accomplishments. And that had two major parts to it. First, on the corporate side, think C corporation, big corporation, multinational corporation, also just called the business tax cuts, taking the corporate rate from 35% to 21%, a 14% drop, though that's a little overstated because what they did was greatly simplify various loopholes and industry carve-outs. So the actual effective rate was not that big of a drop, but still a significant cut. Most importantly for our purposes here, that was made permanent, meaning it would take an act of Congress and a law signed by the president to change those rates. On the flip side, we have the individual side, and this would include your small businesses, your LLCs that are taxed as S corps and partnerships, or your sole proprietorships on Schedule C, filing with their 1040, all our small businesses. And they did a whole lot of things there with the Tax Cuts and Jobs Act, the TCJA, as well. They doubled the standard deduction, making it far fewer people itemize their deductions. They would just take the standard. When you couple that with, they also capped the deduction for state and local taxes at $10,000. When you do those two things together, you double the standard and you cap the state and local tax deduction, you have far fewer people itemizing their deductions after this. The Republicans would argue at the time that they, by doing this, simplified the tax code. At the same time, there were also cuts on the personal side. Broadly speaking, the income tax brackets decreased. It kind of depends where your income fell, to what degree it decreased. For instance, at the highest ends, it went from a 39.6% to 37%. Additionally, there was added complexity with the Qualified Business Income Deduction, QBI. But Republicans viewed this necessary to find parity between a big tax cut they gave to the big corporations. They did something similar by giving this QBI deduction to your small businesses, all your pass-through businesses. Basically made it so 20% of that income was not taxable. It was a deduction. You could do a whole new series of videos on QBI and some of the complexities there, and we certainly will, because there's changes coming in these proposed legislation. In addition, you had some increases to the child tax credit, and you also had a very large increase, essentially a doubling of the estate and gift tax exemption. But here's the kicker for today's purposes. Most of these cuts and reforms were temporary, and they sunset as of December 31st, 2025. Fast forward today, then, hopefully you can start to see the political stakes. If nothing is done, Republicans would have effectively overseen a tax hike, and the fact that they didn't pass a bill to do that probably is not going to be a great excuse with the midterm voters. The Republican solution is simply to pass a law. Easier said than done, of course, with very thin majorities and certainly not a filibuster-proof majority in the Senate. Complicating this further, there are other policy aims of the Trump administration that are in the one big beautiful bill, which are beyond the scope of your humble tax talker to break down. But know that those are hangups in the bill as well. Republicans will be attempting to pass this using the budget reconciliation process, which has become very popular. It was how the Tax Cuts and Jobs Act was passed. It was how Biden's Build Back Better was passed, and the Inflation Reduction Act by the Biden administration as well. This is essentially used when one party controls the three branches of government They're able to pass this with 50 votes plus one for vice president in the Senate, and a majority, a maximum of 218 votes needed in the House, and then the signature of the president, as opposed to the filibuster-proof majority in the Senate. The budgetary reconciliation process makes this a party fight. Democrats are popping popcorn on the sidelines. They're voting no on whatever is put forward. And the final kicker is that the House and the Senate have to pass the exact same bill down to the letter. And as we said at the top, the House has passed their version of the bill. The Senate has passed their version of the bill. The House actually did it with 215 votes. They had some absentee voters, so they didn't need that 218, but they did just do it with one vote. It was 215 to 214. So in order to bring House and Senate together, they're going to have to sort through some of these policy differences. The big one that you're going to hear a lot about is SALT cap, state and local income tax deduction. Again, that's your income taxes plus your property taxes paid to whatever state you're in. Pre the Tax Cuts and Jobs Act, you could deduct these against your income. There were income phase out. It wasn't quite that simple, but broadly speaking, you had that deduction. And then you capped this at 10K. Very dramatic change introduced in 2018. Now the House, because it has some Republicans in high income tax states, want to raise that cap. They have it set at 40,000 with phase outs for very high income earners. Meanwhile, the Senate, they left the 10K placeholder in place. So big gap there. It is worth keeping in mind, though, Trump himself has signaled that he's fine raising the cap. Some other big differences. Medicaid, the Senate, full of more deficit hawks, has deeper cuts there. The House didn't make as many cuts. On energy credits, kind of goes the other way. The House took a meat cleaver to what the Inflation Reduction Act put in place, whereas Republican senators are saying, hey, businesses have already made investments, they're relying on this, it's not good to pull the rug out even if you don't like the law. There's also some differences in depreciation and bonus depreciation, R&D expensing, the child tax credit. There's differences around the exact amounts and whether these are temporary or permanent, but I wouldn't say these are big differences between the two bills. They're more the details to iron out. Hovering over all this is the budgetary reconciliation process, right? This is not how the bill became a law that we learned about in Schoolhouse Rock. It's a little different. There's some additional fine print, some rules about how much you can add to the deficit, about what the law can contain that can also affect, where they land on some of these deductions and carve-outs. Republican leadership has said they want to pass this thing by July 4th. It's an ambitious goal. It's an arbitrary one, but it helps to herd the cats, as they say. And as a tax professional, I would love that, to have a tax bill actually passed and have some breathing room ahead of filing season. But as we discussed before, you can lose basically no votes in the House, and you have a 53-person majority in the Senate, so a little bit more wiggle room there, especially with a J.D. Vance tiebreaker vote option if necessary. With the Republicans today, it seems more likely the trouble would come from the House. With how thin that majority is, it's not hard to imagine one congressman or woman making the calculation that it's better for their personal brand to blow this thing up, especially if they're not planning to run or they just think they're going to lose in 2026. The headlines could be worth it. Just go back a few years, it was actually in the Senate, but that's where Biden ran into trouble with Senators Sinema and Manchin holding back his agenda in 2021. They eventually found compromise, but it was moved to a much smaller bill, and it was many, many months later. Overall, though, I would say conventional wisdom, both in broader politics and in the tax world, expects this to get done. The Republicans do have the Trump card in the Oval Office. He has a persuasive hand in Republican circles, to say the least. So if I'm betting in Vegas, I would probably bet that it passes. I would bet that it does get done at or around the July 4th. But if we don't see that, we could see many months of this stalling out and then a second attempt right before filing season in November, December. I think it's unlikely we'd see like it passed in August or September. So always good idea to go on YouTube with your predictions. Thanks for watching, everyone. Like, subscribe, leave a comment with your questions about the bill. We'll be coming out with a whole lot more content on this and the rest of the tax world.